Have you missed it? Like, do you guys think, oh, I should have got in on Bitcoin?
I don't spend a lot
5 years ago.
Bitcoin.
And Bitcoin is something that certainly a lot of people think, is going to rise as an alternative currency.
The Australian Bitcoin Podcast, presented by Hardblock.
It's not a currency, it's not money. I don't understand it.
G'day, welcome to another episode of the Australian Bitcoin Podcast, episode 95. I'm DJ, Mike is back on deck, plus we have a very special guest with us today, Daz B, legendary Aussie Bitcoiner, advisor, sparky and thoughtful thinker, with probably the most Australian name in the Bitcoin game. G'day, Daz.
Hey boys, thanks for having me again on this wonderful podcast, the only place to get all your up-to-date Aussie news.
Yes, sir. Yes, sir. Our co-hosts and the hosts may change from time to time, but the signal remains strong, So we're recording on the 11th of September, and we're at block height 914,180. Price of Bitcoin currently is $172,000 dues. And 114,000 of the cleanest dirty shirt in laundry. Hash rate, we'll get to this a little bit later, but we've just hit over a Zetahash. We're hitting 1,153.2 exahash. I think that's probably the real bull market there. But Mike, you have been traveling OS. Before we get to that, I guess we might talk a little bit about the price and what's happened in the last couple of weeks since I was on with Tom. Consolidation. We're just grinding sideways.
Yeah, it's kind of just chopping around the mark, around that 110k US at the moment, around 170k Australian. It's just kind of hovering there. It did take a tumble right as I was attending the Asian Bitcoin conference, Bitcoin Asian conference over in Hong Kong. And there is this conference curse that people talk about, which is wherever there's some kind of bullish conference happening somewhere, the price always takes a bit of a hit, which is a bit of a paradox considering all the hype around these conferences. And so it did seem to happen again this time with the Asian Bitcoin conference. Price took a tumble on the 29th and 30th of August. Since then, it's been slowly creeping back up to where it is today, to that 114k US mark, 172 Aussie dollars mark. And yeah, it's just sort of slowly milling around the area. Not too much heavy activity happening either way.
No, it's been pretty steady. It's almost like we're coiling the spring at this 110. And there's a lot of Bitcoiners out there. I count myself as one of them. Which are kind of getting a little bit bored with the price action. Let's be honest, price is probably the most boring anyway of Bitcoin, let's be frank. But I guess if you contextualize it with, if you've been around long enough, and perhaps we can all maybe remember the meme. There was a meme going around early, 2021, 200K by conference day. And that was for the big Bitcoin conference over in the US. And, if you'd have been around, you sort of think that's reasonable. That makes sense because 2017 was this massive parabolic and up it went. And so we're hoping for some history to repeat or at least rhyme. And so this 200K price level was kind of in the back of our minds. And then what did we get? So just shy of 70, I think it was, as high as, that was about as high as it ripped, I'm pretty sure. Down from 3, which is pretty good. Like, I think it was 3K US. But this notion of 200K, sort of like, I'm not going to get too excited about price until we're kind of steady beyond 200K USD, because inflation's ripping and it's kind of outpacing Bitcoin at the minute, Or maybe you don't, I don't know.
Yeah, I think you guys mentioned...
Sorry, DJ, you lagged out a little bit at the end there.
Oh, did I? Apologies. Starlink's not that good, I'm not going to lie. VPN is off? Don't know. Let me check that. I'll turn it off. Let me. I might disconnect for 1 sec. 1 sec.
Oh, there he goes.
I'm on Starlink too, and it's over there, and it's actually holding out all right at the moment. So it's
Yeah, maybe you're in a nice uncongested area. Oh, he's back.
yeah.
Mine
Oh,
craps
look at
out
crispy clear it is
with the
too.
VPN. I'll edit that bit out. That's all right. Price. Yeah, go for it, Daz.
Yeah, well, you mentioned boredom, which is an absolutely fair comment, and I think a lot of Bitcoiners are bored with the sort of price action, especially when like chop solidation for months on end. But I think if you can take any comfort out of that, this market's maturing, and I often reflect on the longer we span in these periods of where the price is fairly steady in tight bands, it sets a nice floor for the potential leg down because Bitcoin's a volatile beast. We all know it can drop 80% in the drop of a hat. We're hoping as more institutional adoption, more sophisticated investors come to the space, that starts to iron out somewhat. And, when you look at like traditional trading, what do they call it? Stargazing for men. What do they call that? Astrology for men.
Astrology for men.
It does set price floors. So these are really big bands of demand. So if you can take some comfort out of the fact if we do shoot up to 200,000, then we're setting price floors here. So as we go along, the longer we can go up, have a leg up, and then consolidate and put in really, really big blocks of demand, they set price floors for any potential legs down. So it adds a little bit of surety into, well, if we do go up, where are we likely to come settle back down? And I think this market's evolving, it's changing. I'm still a four-year cycle maxi until proven otherwise, but I do think we spend a little bit more time now, leg up, chop, leg up, chop, leg up, chop, and we'll just step up to the inevitable $1 million plus Bitcoin. Put that in your sound bites, sound grab. $1 million Bitcoin by 2024.
Well, that's what was claimed by Eric Trump at the Bitcoin Asia conference. He basically came out and did the final sort of major speech at the end of the conference, and his main thing was no question that Bitcoin hits $1 million. He didn't necessarily put a time prediction on there, but he said that's his claim. It's going to hit $1 million at some point.
Yeah, I mean,
this year, next year, 10 years. Who knows?
$10 million Bitcoin's going to happen for sure. Just don't ask me when to tell you. Like, I can give you $100 million Bitcoin if you like. We could go to $1 billion Bitcoin. We are dividing the entire global wealth by 21 million. So, yeah, just don't ask me to tell you when. That's fine.
We're probably due for some more choppy activity because there's a lot of talk of more federal rate cuts, interest rate cuts in the US this month are on the cards. And that typically does cause a bit of action in the Bitcoin price in the aftermath. It tends to sort of be a bit chaotic, but then sort of end up with a big upside on the end of it. So, eyes open for those rate cuts to come through, and we'll see what happens after that.
Yeah, nice one. So you're over at the Bitcoin conference in Hong Kong, Bitcoin Asia, happening on the 29th to 30th. So about the last time we recorded this pod. But what was your thoughts there, man? Give us a little bit of a 101 lay of the land, Bitcoin conference Asia.
It was good. It was my first experience at a big sort of flashy conference. Like I've been to obviously lots of Bush bashes, Bitcoin Alive, and I went to the Indonesian Bitcoin conference 2 years ago. And they're all nice, but they're, obviously limited by the size of the population of the country that it's in. Whereas Bitcoin Asia was a bit more like a Bitcoin Miami, Bitcoin Las Vegas type of vibe. Was put on by the same guys that put on Bitcoin Miami, Bitcoin Las Vegas. So it had some scale to it. So it was in the Hong Kong conference center, big conference hall, 4 stages, big conference hall with like booths and that sort of thing. So it was my first like real big flashy conference. And I'm not going to lie, there was a lot of shitcoining going on. There was a lot of there was a bit of signal in the noise, but it was a lot of shitcoinery. Lots of Bitcoin mining stuff on display around the shop floor. All these obviously Chinese companies shilling their stuff, which is, it's interesting seeing what's being done in the mining space, in the hardware space that's still coming out of Asia. Surprisingly, there wasn't any showing by the new guys, the proto mining that got announced recently from Block. They weren't there, which I was surprised to not see them there. So maybe we can ask your thoughts on that later on when we chat about mining, Daz. It was a bit sad to see Adam back. So Adam back had a couple of chats on the stage, and the main one he had was kind of just shilling for Bitcoin treasury companies, which I find a little bit sad. Like whether you like or don't like Bitcoin treasury companies, it feels a bit weird seeing like a Bitcoin OG like Adam back just shilling for these sorts of things. It doesn't really feel right. So that was a bit of a weird one for me. There were plenty of Aussies there, which is good. Lots of Aussies over there representing good old Australia over in Hong Kong. And yes, as I said earlier, Eric Trump came out and had a bit of a big old sell for Bitcoin and US leading the way and $1 million Bitcoin, and talked about his American Bitcoin treasury company that he's heading up with Don Jr. So yeah, pretty interesting stuff, pretty busy, pretty flashy. The only downside was, that shitcoin focus in many ways. And it was sad. It was a lot of people there were brand new. A lot of Hong Kongers were brand new to the space, brand new to Bitcoin first exposure. And there was a bit of this sort of stuff that's going to lead them astray a little. But otherwise, pretty good.
Yeah, I mean, look, and if you're a new listener or you're new to Bitcoin and you're wondering like why we're banging out the so-called other coins, the altcoins, the shit coins, I mean, it's for good reason. They're all just Ponzi schemes, let's be honest. But the notion is that when we talk like this and we're so assured, most of us probably even done the U-turn, and we've entered the crypto space, and we've bought a little bit of Bitcoin, and maybe we've diversified our portfolio and bought a little bit of Power Ledger and a bunch of other garbage, and then they've all ripped up really high and then tanked, and we've lost all of our money. So the notion from folks like us when we talk about this with such a surety is that we're trying to prevent you from having to enter that U-turn. And so it might sound disparaging if you use the word shitcoins, but that's what they are. And in fact, that was actually a term coined by Nouriel Roubini back in the day, who called Bitcoin a shitcoin. And then just like all great, what's the word here? The Telebian thing. We just absorbed it and we made it our own. We co-opted it. So, but you're right, Mike. Like, to go to a Bitcoin conference, you would expect that the clue is in the name and that there would be very little mention, if at all, if any. But I mean, their track record for indulging some of the shitcoin aspects of the space is fairly well known, certainly by now. I think that's because that's where the money is right now. Unfortunately, it's very difficult to be a Bitcoin only business, more so than, say, if you were to accommodate some other ones. So there is almost a moral imperative here, and without being righteous about it, it is difficult, and there's a cost involved by only solely focusing on Bitcoin as your as the cryptocurrency, of choice. So I just want to say that.
Yeah, and I think you boys hit some good points, and I think some other things to touch on there is like Bitcoin's protocols out there, right? Has no marketing team, has no budget. These shit coins, when they pop up, they, and hats off to the guys like Bitcoin Alive and so forth. They do get approached by these companies who have VC backing, a lot of funding. They invent these shit coins out of thin air, propagate it to the masses, get all retail funding. So they've got big pockets and they can go to these conferences and spend big. And sponsorships are what pays for these conferences. So, hats off to the guys like Bitcoin Alive who keep it small and humble. And, like you rightly put, DJ, it's very hard to make money as a Bitcoin company. Like you've got to provide value to earn Bitcoin. If you're operating in the Bitcoin space, you've got to create an immense amount of value to basically be profitable in Bitcoin. So a lot of these Bitcoin companies are just there solving the issue that, providing the product, providing the service. There's not a lot of fluff around the outside left over for sponsorship, so they don't attract. So that's why these new conferences, especially with new people, invariably attract the wrong type of funding and crowd and sponsorship, and these shitcoiners do leak into the system. And DJ was right. Like, we're only so vehemently against these just to try and save people from touching the stove, right? Because you log on, you go to these shitcoin casinos, these exchanges that offer all the blinking lights everywhere. It's like, oh, this so-called coin that popped up yesterday just did 1,000%. You too can get 1,000% if you get in today. Typically, you are last and you will lose money. So we're just trying to save people from, and funnily enough, we all did, hand up, shitcoined, even made some profit out of shitcoins. And it was only through the act of me trying to educate myself on traditional finance, being a humble electrician, humble wage earner, trying to get ahead. My second job was finance. My second job was trying to learn how to make money outside of, like, not only just keep my money, but even I was going backwards due to inflation, so I needed to make more money. My everyday job, my wife working full-time, me working full-time wasn't enough, right? So I read all the books, did all the courses, tried to teach myself how to invest, and it was only through the act of writing out my thesis, trying to teach people about traditional finance, macroeconomics, fiat currency, inflation, all these things, the act of writing and educating people on why I discovered Bitcoin and why Bitcoin makes a little bit of sense to have at that stage. It was only through that process that I really realized what shitcoins were. I was about to start writing an article saying, here's why I owned Ethereum. Oh, hang on, I better do some more research on why it is that I own it. Oh, hang on, infinite supply. Oh, hang on, they did a pre-mine which lined the pockets of the founding members by 70% before they released it to the general public. Oh, hang on, they wanted to sell it for Bitcoin. Oh, hang on. And just time and time again, running up to coming to the realization through that process that I didn't know why I owned it, aside from potential of number go up, where if you take the time to study Bitcoin, there's some very fundamental things. It never had a pre-mine. It got released to the public at the same time. Anyone who could participate could mine Bitcoin. You've got to provide value to get it. It's got a fixed cap supply. There's no marketing team. There's no CEO. There's nobody who can roll the chain back. There's all of these extra layers that really stand Bitcoin out as this pristine digital collateral that cannot be copied. Some would argue, and it's a very common argument, that you say, well, it's just like other coins, right? They come out of thin air. It's a digital commodity, blah, blah, blah. What's to say someone else can't do it? And there's a few layers which obviously you could spend a lot of time. You could spend a whole episode on why, but it's first mover advantage and it's market effect, so network effects. Okay, and that's where, like, you and I could start Facebook tomorrow. Doesn't mean anyone else will shop there, or spend their time there. It's the exact same with Bitcoin. It's got first mover advantage. It can't be recreated in the same way without some of those trade-offs that we spoke about with pre-mines and all that sort of stuff. So it really is worth taking a little bit of extra time to understand why Bitcoin is different to the other things. It's not just that we hate these things for the sake of hating them. We hate them for a reason. Rant over.
And yet, that's a really good point. And we need to try and get that message across to our friends in Asia, because there was a report put out this year showing that APAC is the fastest growing region for crypto adoption worldwide. And it's kind of reflected in what I saw at the conference. There's this massive conference on, a lot of people are getting into it for the first time. And there is a chance here that we can kind of intercept them from going through the same pains that we did and lessons we learned. We can kind of help them along a bit earlier before they get captured by the flashy lights of the VC altcoin shills over there. And China's an interesting one because, the conference was in Hong Kong. China has still got Bitcoin and crypto banned on the mainland. You can't hold it, you can't mine it, you can't invest in it. But they see the writing on the wall. They see what the Trump administration is doing in the US. They see that there is a demand for these sorts of technologies, and so China's kind of trying to toe the line of how much can we allow versus how much do we need to keep it locked down. It looks like they're going to use Hong Kong as their sandbox. So I am expecting a lot more activity to come out of Hong Kong, to come out of China now that are more businesses, more VCs in operation over there, more strategy companies, that sort of thing. But hopefully, the locals that do get into it from a Bitcoin perspective rather than that altcoin perspective. So we need to work out how to help them along a bit if we can.
Yeah, man. Let 1,000 flowers bloom. Like, let's go China and USA head to head, stacking as many sats as you can. Love to see it. Indonesia Bitcoin conference was about a week or so, a couple of days after the Bitcoin Asia conference, and you went to that as well, Mike. And what did you think of that?
Yeah, so that one was completely different sort of vibe. You know, the Hong Kong one was big, flashy, massive, you know, thousands and thousands of people there. Whereas the Bitcoin Bali conference or the Indonesian Bitcoin conference was a lot more grassroots, a lot more community driven, felt a lot more like a bush bash sort of vibe. If you've ever been to an Australian Bitcoin bush bash, it's kind of like this grassroots small convention type thing. So that's what it felt like. It was hosted out of the Bitcoin House Bali, which is pretty cool. It's a like a co-working space with a Bitcoin focus that's been spun up in Bali. So they hosted the conference there, and it was really really sort of grassroots, passionate speakers talking about very specific topics, whereas a lot of the Hong Kong stuff was more kind of rah really really broad things. And the other thing that they really nailed with that conference was the side events around the conference. So whereas the Hong Kong one was just go on the day and just smash out a bunch of talks and chats and stuff, whereas the Indonesian Bitcoin conference, they called it Bitcoin Week, and they had, you know, a bunch of activities either side, you know, and it was all things. It was roundtables, it was workshops, you know, how to do this, check out this new technology, but it was also social things like let's go play paddle. I've never played paddle before, so we went and played that with some Bitcoiners. Good fun. What else?
What's paddle? It sounds sexual.
A bit of meditation, bit of breath work. Paddle, it's like pickleball. It's kind of like tennis and squash put together. So it's good. It's a little bit less running, which I appreciate. So yeah, it's good fun if you've never tried it. But yeah, then they had some side events around like a bit more of that Bali-esque, you know, meditation, mindfulness type thing, which, you know, it's interesting. It's and it's something a bit different if you've not really done that sort of thing before. So yeah, really appreciate what the organizers put together, and hopefully I can get to a future one if they put on another one in the future, because yeah, it was definitely worth the trip.
Are you looking for a simple way to buy Bitcoin in Australia? Hardblock makes buying Bitcoin easy. As Australia's longest running Bitcoin exchange, our mission is to help Aussies simply and easily buy Bitcoin and take it into self-custody. There are no deposit or trading fees, just a clear 1.2% spread whenever you buy or sell, lol. That covers our operating costs, so you always know exactly what you're paying. Withdrawals are just $1.18 AUD or as low as 400 sats with AutoSend. No hidden charges, no surprises, just a fast, reliable and easy way to stack sats with total transparency. Get started today at hardblock.com.au. Bitcoin made easy for Aussies.
Very nice. We're going to have to talk about it just briefly. The Bitcoin spam wars, they continue. Knots is charging ahead now at around 18% of all reachable nodes. It's the third most used implementation of the Bitcoin software, with Bitcoin Core being, I guess, the number one. Is Bitcoin in there as well? I'm not sure. Maybe you know that, Mike. But give us the rundown on where we're at, because it's kind of heating up and it's a little bit divisive, and everyone's sort of fighting about it on Twitter mostly. Nosta's pretty quiet, a little bit more serene. But, you know, everyone's got an opinion, just like everyone's got an arsehole. So, I don't know. Do you have an opinion, Mike?
Oh, I've happily got an opinion on everything. I mean, it's kind of heating up because of the pending release of Core version 30, slated for end of next month, October 30th. So for anyone that's not aware, that implementation of Core is going to remove the 80-byte limit on the op return function. That is basically some arbitrary data that can be included with Bitcoin transactions. They're basically removing that cap, so it could go up to 4 megabytes of data in that op return function. And the concern for Bitcoin knots maxis or anti-spam maxis, that it will increase the amount of spam and sort of that sort of thing on the Bitcoin blockchain. But then on the other hand, curtailing that or limiting that is effectively a control on speech. Is the argument used by the pro spam crowd, if you want to call it spam. So yeah, it's a touchy subject because it touches on censorship versus monetary freedom. Like, effectively, we are saying, no, we're not going to allow these certain transactions on the Bitcoin blockchain because they constitute spam. But the argument is that that is a limit on free speech, and it is a slippery slope that could lead to a curtailing of certain types of monetary transactions. So the debate rages online. The other thing that I found interesting was this guy, Portland Hoddle, allegedly was gloating about effectively DDoSing Bitcoin knots node operators, basically by exploiting this sort of quirk where you could trigger them to redo their initial block download of the Bitcoin blockchain. And he's just he was almost bragging about it. And I find that this sort of thing just like absolutely insane. Like, this is an employee of a large mining company bragging about targeting and attacking people running infrastructure that ultimately runs the Bitcoin network, based on his philosophy. And so it's like, we need to talk about it. We need to be aware of this, but at the same time, we don't want to get too lost in that discussion, in that debate, because there are more important things happening at the same time as well. Do you have an opinion on this situation, Daz?
I've got a couple. I don't have strong beliefs yet because I simply haven't afforded the time to do the work to really deeply understand the arguments on both sides and the technical arguments on both sides. There's a lot of whitewashing, I think, a lot of wishy-washy ad hominem attacks, and that's really where I tune out. But a couple of just rounding thoughts. I like the fact I have a choice. I like the fact that there is an alternate implementation. I think Bitcoin core developers have had a lot of power for a lot of time, and I think to a certain degree they're abusing that power. I do get concerned that there's not a lot of more developers working proactively on knots, and that could very well change with the degree of funding that is pointed towards various implementations. I think that needs to increase, and that's great through like funds like OpenSats, who are a charity group that non-for-profit who do fund developers, and I hope that they turn towards some other implementations. I think if for people sitting on the fence here, a little bit overwhelmed, a little bit confused, I think the takeaway message for me certainly is, when in doubt, do nothing. Don't update your node. Don't change. Run your continuing software will work just fine. And this is the beautiful thing about the way that in which we go about development in the Bitcoin ecosystem is through soft forks and hard fork consensus. So if they really want to make something, we're not talking about consensus rule changes here. That's a totally different kettle of fish. And I think that's where, if it were consensus rule changes, we'd see some really, really ugly things really, really quickly. And I mean, this has gotten ugly, right? But at the end of the day, it's non-consensus rules. So we are free to go and run whatever implementation we want of Bitcoin. And that's a net good thing. And like I said, if your default is you are unsure, just do nothing, I think is the safest approach. And this will all come out in the wash, I think, in the end. I think there will be some sort of happy medium. One thing I would say is, like, I respect anyone's ability to run whatever version that they want, but I also like freedom of choice as well. So I think, one comment quite some time ago was, even with this version 30 of Core, is just make it a user definable field. So if I want to run my node and I want to limit it to 80K or 0 or 10 or whatever the case may be, then I should be able to do that, regardless of perceived downstream consequences. And I think the final closing thought is, I do think money is Bitcoin's primary focus. Everything else on top, inscriptions and all this other stuff, like, I certainly don't want to be holding your monkey JPEGs on my node. Do I have a choice? No, probably not. Should we be encouraging that? I also think probably not. Um, like I said, just when in doubt, do nothing.
Good call.
Yeah, good call. I like that. Or look into the Bitcoin as well, which is it's a little bit more technical, but it's lighter, and it sort of tends to do away with a lot of this stuff. Anyway, fill your boots. It's a topic, and I think the thing for me to wrap it up is basically it's just another thing for people to argue and choose a side over, and I really don't dig like that kind of combativeness, and I just think it's just a little bit basic, and not.
I think someone summed that up
thinking.
really well, actually. Sorry, DJ, I just spoke over top of you, but that someone summed it up really well, and it's like this divisiveness and this argument is the attack. It's not necessarily the pro, Bitcoin core or the pro knots. It's the argument itself, which is the attack, which I thought, made me pause and think, yeah, that makes sense.
It's the oldest play in the book, like divide and conquer, and we see that quite a lot nowadays, with various incidences around the world where you have to pick a side, you have to choose a flag, you have to choose a color, you have to choose a team, whatever, and it's just, I don't know, it's me personally, I'll speak with me personally, it's beneath me. All right, a little bit of Australian news. So Australian banks are embracing AI, not Bitcoin, but AI. They're loving their AI because they can get rid of a whole bunch of jobs, which is interesting. What do we got? 3,500 jobs to be removed by the ANZ, 145 by Bendigo Bank, 200 jobs. The entire contact centre is being offshored by the Bank of Queensland. 1,500 jobs to go at Westpac, and the NAB 410. So, I mean, it's probably a drop in the bucket, but the point is there's people that do those jobs, and now they can't. And I'm not a Luddite, but it is interesting that they're so willing to embrace AI, which is pretty much untested too. Like, these LLMs are very powerful, no doubt about it. But I'd be interested to see if they really perform, at their best. Having said that, though, I've worked with a lot of people over the years, which we could definitely get rid of their jobs. So, I mean, look, whatever, horses for courses. Talk to me about that, Mike.
Yeah, there's plenty of jobs out there, especially, you have often looked at these giant banks, especially the big four banks that employ like an insane number of people, and it's like, what do they do all day? When you think about what a lot of banks do, it's not the most complicated thing in the world, and there does seem to be a lot of bodies for what these institutions actually do and what value they bring and what they produce. Like, if you could even call what they do producing anything. But yeah, there's a lot of downsizing happening across these entrenched financial dinosaurs in the Australian industry at the moment. So likely a lot of it's due to AI. A lot of it's probably due to the fact that we're probably in a bit of a shadow recession, if not shadow depression. That we're just don't talk about it and just don't believe it, and maybe it'll go away. That's what the government's hoping, at least. But we're starting to see the impact of that happen across some of these dinosaur institutions. And yeah, I think it'll start at, if you think about the way the money is created and funneled through the industry, and it goes to the institutions at the top first, the banks. If these guys are having to axe large numbers of employees, we're likely going to see this flow on to all these other industries that are in the spigot of, as dollars move through the system. If it's happened to these guys at the top, it may be coming to the rest of us in the other industries that actually produce things. So hopefully I'm wrong on that one. But yeah, it could be a sign of things to come.
Oh, look,
I couldn't agree more, Mike. I think some of these jobs, sorry, DJ, again, I spoke over you, mate. There's a bit of lag.
It's all good, brother.
A lot of these jobs that AI can replace, I think you have to ask yourself whether they were providing value in the first place. And I think, again, if we take any comfort of the trend, It's that in a Bitcoinized world where our money doesn't lose purchasing power, us as humans are creative people. We'll pivot, right? These AIs will come in, they'll take those jobs, but we will adapt, we will shift. And I'm hoping that it leads to a more beautiful world where we've got people who create things with their hands and get back to the arts and music and all of these things which make us human, rather than having to work in a call center in a cubicle answering phones because you can't log into internet banking. So I think if your job can be replaced by AI, was it that valuable to begin with? And that's not to discredit anybody who does those jobs. Obviously, they were really good paying jobs for people who didn't have these 4-year degrees and 7-year degrees and 4-year apprenticeships and all that sort of stuff. But I think like downstream of that, us as humans will pivot, we will shift, and we will hopefully hone into these, defined skills that'll make us ultimately a more beautiful place to live.
That's right.
Yeah.
We want to move out of these sorts of things and get back into more, we want to be artisans again, building cool shit with our hands rather than staring at spreadsheets all day on a computer. So it could be a good thing in the end. And obviously it sucks to lose your job, but hopefully they find a higher calling, higher purpose.
Yeah, I mean,
it's never too late too. I think most people get.
Fuck, Daz, Jesus Christ!
You go, DJ.
All I was going to say was,
sorry, man. I don't know.
I need to be directing you guys.
You're like super laggy, I think.
It's
or am I
because
laggy?
of the massive lag. I'm pretty sure there's just a big old lag going on. I'll have to talk to Elon, get some money back on the subscription. No, I was just going to say that even if you don't want to be an artisan, and you want to go and do something else, I mean, yeah, fill your boots. I like to listen to. There's a really great podcast called The Good Stuff, or it might even just be Good Stuff. It's the Good Stuff podcast with Pete Wynn and Andy David, and they have chats, long form chats about how they're employing AI to do various things, and you hear like Pete, he'll talk about how he's got 2 agents running locally at home, and then he'll get them to have a conversation with each other about a particular topic or subject. He'll say, I think I want to do X, and I also want it to do Y, and ultimately we want it to get it to Z. Here are the parameters. Have a conversation. He'll leave them, go for a walk or whatever, and come back a couple of hours later and then read through the transcript of what they've discussed. And he says it's extraordinary, just some of the ideas that they've either developed that he's given them, or that they've come up with things that he wouldn't have even thought of, just because they were able to synthesize from a whole bunch of different sources. So, if you're into that sort of stuff, well, fill your boots. And if you're not into that sort of stuff, well, you'll be a net beneficiary of it anyway, because someone will do something cool, and then you'll be able to have it more than likely as an app on your phone. So, we all kind of win in the end.
Well, I'm glad I paused and didn't speak, because you nailed that, mate. That was great.
No dramas.
Just to talk about something kind of sort of related to the banks, but a little bit different. Something that I had no idea was coming is the RBA has proposed to put a ban on passing on payment surcharges to customers. So you know how when you go to pay an invoice or pay for something, and you see in the fine text, we've added on, your 2% surcharge or something like that. The RBA is actually looking to ban passing that on to the customer, which is quite an interesting piece of legislation. Supposedly going to save $1.2 billion to Australian customers. My hope is that this would help businesses realize that they are getting screwed on these payment fees, and there is an option, there is an alternative, which is Bitcoin, that doesn't offer such obscene fees that are mandated by these card issuers. So, even though it is a bit of a, we're not happy with government mandates and government bans and all this sort of thing generally, we'd rather let the free market speak for itself. I do wonder if this change might accelerate adoption of merchants switching over to Bitcoin rails and going back to good old cash.
I doubt it. Maybe. Yeah, I don't know. I think that people have got to touch the stove. And to be honest, when you mention Bitcoin, the amount of hurdles you have to jump over just to get a basic grok a Lightning thing, even if you got them to download Wallet of Satoshi or something that was super straightforward and simple like that. We had first-hand experience of that for the entire month of August when we were collaborating with Rise Mofo. And some of the after-action report was that basically there were people that their ears pricked up and they were interested and they were curious and they wanted to know more. And effectively, they kind of dove deep into the rabbit hole. And then there was another cohort which just completely ignored it and did not care at all. Wanted to pay full price for coffee, for cookies, and all sorts of other delicious things that they sell there. And it wasn't enough of a bait for them. And I guess merchants are going to be reasonably similar, and that money will probably be absorbed elsewhere anyway. That's what the market will do. And so ultimately, and by the way, sorry, the RBA is an independent institution. Are they able to like legislate things? Like what is this? I don't understand. If you want to put a surcharge on your FPOS transactions, your business, fill your boots. Like there's one in town here that does 10% on weekends. And it's like, why? Like just don't open if it's such a problem. You know, like it's not my job to absorb, but I get it because they also have to come up with 12% per annum for superannuation payments and all of these other extra things that you have to do, payroll tax and company tax and all of this other stuff. So I get it. I mean, ultimately, just stop screwing around and let people choose whatever they want, and it'll figure it out. I don't know. Yeah.
Yeah, I mean, it is difficult to overcome the friction that people have. You know, they're comfortable in the ways that they're familiar with, and so it is hard for people to make that switch. I don't see this change as making a massive difference to that. But I just thought it was interesting that that proposal's out there. It'd be difficult for them to justify it, but we'll see what happens in the next few months.
I just wanted to quickly touch on the next news topic, and then we'll roll in over to Daz and we'll talk about Bitcoin mining because I think I'm excited for that chat. But there was some data recently released by the ATO that crypto holdings, specifically, I guess, Bitcoin, had actually fallen over the year to date or the last financial year by about 4% year on year.
For SMSF
despite the rallies. For SMSF specifically. And so the data which has been adjusted for consistent valuation shows that in June 2025, SMSF crypto holdings were at 3.02 billion Australian dollars. With the Bitcoin Advisor, Daz, that's part of what you do there is to kind of onboard people to, start an SMSF and ultimately fill it with Bitcoin. And certainly we facilitate that as well at Hardblock. We enable you to be able to purchase Bitcoin for your SMSF and hold it. So what's your perspective of this kind of 4% fall? That's pretty high.
Surprising. We're seeing hand over fist more and more people starting to come to the realization that self-managed super funds are possible for a start and well more approachable and within reach than previously believed. I think over the last couple of years, there's been a lot of FUD in and around self-managed super funds, the expenses, and mind you, it has gotten a lot cheaper and a lot more, like I said, a lot more accessible for people, a lot more services popping up to help and assist. So there was a general misconception in and around the population. So to be clear, I mean, at the Bitcoin Advisor, we don't necessarily help people set them up, but we certainly can talk through some best practices and avenues and some of those entities that you might like to pursue those conversations if you are interested in starting a self-managed super fund. Like I, from a personal perspective, am more than happy to share my story and how I went about it. I've run a self-managed super fund since 2020. It was probably the most economically powerful thing I could have done for me and my family, is to take control and invest in the way you see value in the world, right? And I think the other misconception with self-managed super funds is people think they have to manage it all. You don't. You can run them parallel with your traditional super fund. If you just want to get some exposure to Bitcoin, you can run a self-managed super fund in parallel with your existing fund and just allocate what you're comfortable with, what your risk tolerance what you want to allocate to Bitcoin is certainly within your reach, and then keep the rest of your funds just going along in your growth option, balanced option, whatever you've got in your traditional fund. So there's a few things, but I would say what we see at the Bitcoin Advisor is an increased appetite in that, an increased interest in people starting them, as well as an increased interest in potentially, filling and particularly from the older crowd as well. Like people really starting to panic now, getting in their 50s, looking at this retirement goal. They want to start enjoying their lifestyle. They see 60 coming ahead and they simply don't have enough funds. So, one of the things that we are seeing is people of that ilk starting to realize what Bitcoin is and seeing it as really one of the only options in order for them to be able to provide an even comfortable, not a lavish retirement by any stretch, but even just a comfortable lifestyle. So, and what we do at the Bitcoin Advisor is basically that's a really important fund, right? It's your retirement savings. So what we do at the Bitcoin Advisor is a collaborative custody where we distribute keys and we hold a key on behalf of that person, and it basically makes them, with great power comes great responsibility with Bitcoin. If you've got your entire net savings in a single SIG, one little device that you protect, there can be associated risks with that. And everyone's situation is different. Everyone's family situation is different. But we can certainly help you think about how you should secure that Bitcoin into the future in ways that makes it pretty well impossible for you to lose it, which is, vitally important, particularly for your retirement savings.
So the 4% drop, some commentators said that it may not be accurate based on not everyone's tax filings are in yet, and they've kind of just done like a preliminary report so far. So it could be actually in reality, as you say, there are more and more people interested in it, and maybe as the complete data is in, we'll get a better picture. I myself have can sort of ratify that we are seeing an uptick in SMSF signups from a hard block perspective. So I do think that the full data picture will give us a better idea. But question for you: have you had anyone kind of spooked or questioning or concerned about the government's proposed tax on unrealized capital gains? Has that had an impact on
Most definitely
on people signing up? Yeah,
it has, and I find it kind of comical in a way, and I don't mean that in a disparaging way, but people scared to get Bitcoin exposure from the threat that they might have $3 million, where they're not in a position where they're anywhere near the $3 million at the moment. So I find it a little bit comical, and I don't mean to laugh, because I'd rather have that $3 million problem and deal with it at the time than not have a $3 million problem, if that makes sense. And funnily enough, we are seeing some of those conversations. But I think also, where we sit with the Bitcoin Advisor, we give Bitcoin advice. We don't give legal advice, financial advice, or tax advice, but we can definitely help shape the conversations that you need to be thinking about in order to have with those professionals, and as it pertains to tax and capital gains and all that sort of stuff. So I think what's encouraging is that you take empowerment of your retirement future for yourself. And I think, this looming capital gains threat, like there was some news out at the moment that it doesn't look like it'll pass through it immediately, but they might relook at it. You guys can probably correct me if I'm wrong there. But I think there was a lot of panic prematurely. I think it was good of us to all be vocal, and we all pushed back. We all submitted the petitions and all of that, and I think that was great. But I also think there was a lot of panic because we didn't know what it looked like. So, we're always advocates of working within regulations, and obviously we've all got opinions on overbearing regulations, but we didn't know enough at the time to really know if it was a massive problem, or indeed some of the better strategies that we might be able to employ in order to navigate that effectively moving forward. So, I'm glad to hear that it's been knocked on the head. There was some very, very concerning trends and conversations happening from, the Australian Financial Review and from the politicians themselves. So it was scary. It was batshit crazy, and it was scary. But again, I think we can take some comfort out of anything. It doesn't look like it's getting up anytime soon. It's not to say we don't have to. We shouldn't be. Don't rest on your laurels. We should remain diligent vocal about it because that was probably the single most economically illiterate thing any developed country could ever implement.
Yeah, anytime a country's playing with this idea of taxing inheritance, taxing unrealized gains, you're basically killing people's motivation to produce and contribute and do more than the bare minimum. So
Yeah.
it is playing with fire. So it is very strange that governments even entertain the idea.
Yes, the better. The less I say, the better on that. Let's pivot quickly. We'll do Bitcoin mining. So we got Daz B on. He's an electrical engineer, and if there's a man, I've had a couple of conversations with Daz in the past in and around Bitcoin mining, and given the focus of the show, we got a little bit of feedback from some of the listeners who wanted a little bit more information around the basics, I guess, which is kind of what we're, aiming to do with Hardblock anyway, particularly with our learn.hardblock.com.au website, which you can go on. There's 21 really simple lessons that will get you up to speed on what Bitcoin is. Very, very simple. And then we've got our Zero to Hero newsletter as well. We've got our I'll Always Shield This, our Easy Bitcoin book, where you can pick this up, physical instantiations, or there's a digital one as well, where you can basically learn Bitcoin in under 10 minutes. And to that effect, Bitcoin mining, as far as I understand it, Daz, is basically just, it's like plugging in a very specialized computer, which is going to guess a number between, zero and what? I don't know. You tell us, what
Infinity.
is Bitcoin mining 101?
Yeah, so I guess it helps to frame it up in why we mine Bitcoin, and I guess if we to sum that up really simply, it's when you've got a digital commodity, a digital element in the digital world, the only real way to tether and control that is to tie it to energy, and essentially that's what mining is. It's trying to tether the digital world to the real world, so that we can expend energy for a monetary good. Now, why we do this is it's for security, and it's also to control the rate of release of Bitcoin as well. So it's a way that we can make sure we know that there's only ever going to be 21 million Bitcoin. We know there's 19.2 or so, give or take a few. I don't know the number off the top of my head, Bitcoin in circulation now, and we know with pretty precise accuracy the issuance rate of the remaining 2 million Bitcoin over the next 120 years. So we know every 10 minutes there's a block mined. Now, the only way to can actually control that is to, again, tether that reality back to energy. And some would argue Bitcoin mining, and we can probably tear the lid off this a little bit more and talk about it, like Bitcoin's a waste of energy, but there's really no other way of tethering a digital commodity to the real world aside from doing it through energy. And many have argued in the past, some of the great thinkers of our time, like the Henry Fords, Teslas, the Edisons of the world, have often prophesized that monetary goods will be based in energy units. And Bitcoin is our closest instantiation of doing exactly that, tying a monetary good to an energy unit, because energy is everywhere. We use it to heat our homes. We use it to cook our food. Energy is the fundamental base layer of what it is to exist. So it makes sense that a monetary good is tied directly to that. So what is mining? So mining is basically just the biggest guessing game on the planet. Okay. So the only way to fully randomize this and make sure that anyone who wants to participate has an equal chance at participating is to make it random. Okay, so when we think about mining, all we're essentially doing is running a bit of data through a cryptographic algorithm. Okay, that sounds fancy, but it's just math. Okay, so we take data, we put it through a cryptographic algorithm, and to add a bit of randomness into that, we say to this end, I'm thinking of a number. It's between 0 and infinity, and if you guess a number that's, and this is probably a little bit simplifying it, but if you guess a number that satisfies this equation, you win the reward to mine a block. And for your effort, that's going to take energy, and for your effort, you'll be rewarded with Bitcoin. And that's essentially what it is. Now, what we call these guesses is we call it the nonce. Okay, so this is this arbitrary number. We take a bit of data, we're going to add a number to it, we put it through this algorithm, and what we're trying to achieve is an outcome. It spits out a hash. Okay, hash is basically just a giant big number that represents all that data that we had, and we push it into an algorithm, and it spits out a hash. When we add this arbitrary data, this number, this nonce, we guess. We say, if I add the number 2 to this arbitrary data and I run it through this algorithm and it spits out a number, what I want to know is that number below a certain threshold? And this is what we call the difficulty adjustment. And this is how we control the rate of Bitcoin to make sure that not one big entity can come in and mine all the Bitcoin in one hit. Okay, we have this thing called the difficulty adjustment, which means we are always looking at how much energy is being put in towards the Bitcoin network, and we want to control the rate of release of Bitcoin to every 10 minutes. Okay, if it turns out, so what we do is we will work in 2-week blocks and we look back, and this is all done programmatically. No one has to think, there's no one controlling it. It's all just part of the software package. Okay, it looks back and it says, how quick did we mine blocks in those last 2 weeks? Were we at 9 minutes? We need to make it a bit harder. Were we at 11 minutes? We need to make it a little bit easier. And this is what we call this target number in the difficulty adjustment. So it's this number that we need to produce a hash. We take the data, we add a nonce to it, and we spit out an outcome. And if that number's below this target number, then we win the right to mine the Bitcoin. So that target number will adjust. It'll go higher or it'll go lower depending on where we need to be. And obviously the lower that number it is, the harder it is. The less numbers that exist in the world that can equal a nonce that will actually be able to solve a valid block, a valid hash that's below that target number, and then the rest of the nodes and everyone participating all validate that, yes, that was indeed a valid block. Does that make a little bit of sense, or is there any thread you want to pull on there to expand on?
Mate, I think that was one of the most concise
that's
explanations.
Sorry, go
Slang's
ahead.
killing us. No, it's fine, Mike. I was just going to say that was a very concise explanation. I particularly like the fact that you went into the difficulty adjustment and explained that, because when I was learning about Bitcoin, I don't have that kind of engineering mindset, but it was one of the things that I really went, aha, and everything kind of locked in. And it was the value prop, once I figured out the difficulty adjustment of Bitcoin, was pretty much set in stone at that point. I was like, gee whiz, that is a genius bit of kit there. I don't know how to explain it, but you did a perfect job there, Dads. Thank you.
It was one of my light bulb moments too. When I understood that difficulty adjustment, it was the aha moment for me to go, holy crap, this thing is unstoppable. So just to give an analogy, I guess, to the traditional world, right? So one of the worst things, so gold was one of the best monies in history, right? For 6,000 years, it has persisted as a form of money and probably the best form of money we've had till Bitcoin. It failed for a number of reasons, but one of those reasons is because it's self-cannibalizing by its nature of price. So the higher the gold price goes, the more incentivized I would be as a gold mining operation, right, to increase my operations, buy more equipment, go and start what was unprofitable to mine before at a certain price of gold will now automatically be profitable, right? So I'll go and tap into that new scene. And what that effectively does is it introduces excess supply to the market, which is self-cannibalizing to price. So I'm, just to recap it, I'm a big miner. The price goes up. It's now more profitable for me to mine more Bitcoin, more gold rather. So I go out and I buy more machinery and I go and mine all that gold, and I flood the market with too much supply, which actually affects the price to the downside. That's what we fix with Bitcoin. Is that it's the same mechanism. The same mechanism works for me if I'm a Bitcoin mining operation. The higher the Bitcoin price goes, the more incentivized I am to go out and increase my capacity, increase my machines, go out and build new sites, seek new energy resources to mine more Bitcoin. But this difficulty adjustment makes sure that I can't flood the market with excess supply, because in 2 weeks' time, I might have an edge for 2 weeks, right? but that difficulty adjustment will auto adjust to make it just as hard for me to mine it. So I'm only mining every 10 minutes. I can't mine every minute. That's what I'd like to do, but I can't do it because that difficulty adjustment is going to adjust. Basically, it's a float to say how much computational power is getting thrown at this beast right now. And that has what we've seen, like you said before, DJ, it's the real bull market. We see this chart of what we call hashes. I'll dig into what that actually means in a sec, of the hash rate of Bitcoin, and it goes up and to the right. I've gone the wrong way. It is basically just, it's the direct representation of how secure this network is, and we just continue to see more and more hash rate come online, more and more computational power getting pointed towards Bitcoin, which makes it so secure. So it's a really simple analogy. It's not quite accurate, but you can forgive me, but it does help to solidify. Like, if you wanted to hack Bitcoin and change the history, you have to be able to expend the same amount of energy that just the whole globe just porting into it. And when we see this hash rate just going up and to the right, it's a really easy way to understand just how secure this thing is and how impossible it would be to co-opt it and change it.
The Bitcoin mining hash rate, speaking of, has just reached 1 Zetahash, which is, correct me if I'm wrong, a 1 with 24 zeros behind it, which is a huge number, a massive number. And so what does that mean? That means that there is that much energy being directed to the network in order to try and get that reward. And then the difficulty adjustment will take care of that. And it may drop below 1 Zetahash as miners adjust. Maybe they've plugged in too much, and then the difficulty adjustment, because, the blocks come in at a faster rate. But what does that actually mean for, I guess, the Bitcoin network per se? 1 Zetahash, it's a big number. It's hard to comprehend that in your brain, but that is a bit of a big deal, right?
Yeah, it is. It's a huge deal. And again, it's what's basically secure in the network, right? And what that equates to, it's 1 sextillion guesses per second. Okay, so that's like every human on the planet rolling 1 trillion dice a second. That's how big that number is. So that's how many, and a hash is basically just a guess. So when this computer says, is that nonce number 2? That's a guess. Is it 104? It's a guess. Is it 186 trillion? And these numbers are huge. So typically they're guessing that nonce in a very, very large number. They're not guessing 2 or 1 or 102. They're guessing huge numbers at a time to try and find an arbitrary number that'll satisfy that equation, right? So the hash rate, the guess rate is just a phenomenally big number. It's hard for the human brain to comprehend. So there's something like 200 sextillion stars in the galaxy, right? Or in the entire universe. So Bitcoin miners are basically searching every one of those stars every 3 minutes to try and come up with, I found the star. So that's the sort of numbers that and there's a direct correlation to the security of the network. So again, if you wanted to co-opt Bitcoin, if you wanted to change the history of the last block, you have to expend the same amount of energy, arguably, as the whole global network just expended in that last 10 minutes to solve that latest block. So that's why it makes it so secure, and that's why most of us psychotic Bitcoiners are happy to have 100% of our net wealth in this thing, because it cannot be co-opted, it cannot be changed, due to the fact that it's tethered to that energy. You can't create energy. It's Newton's laws. It's cannot be created or destroyed.
Yeah.
Thanks for
First
that,
law
Naz.
of
Can I
thermodynamics.
ask you? Can I ask you two questions, sort of like a double-jointed question? Can I get your state on the mining industry as it stands at the moment? Because chief in my mind is the concerns around mining consolidation, around these mining companies and these mining pools. So it'd be good to get your thoughts on the state of that environment. I think that's a more important discussion than even this spam discussion over here with Bitcoin Knots. That's chief in my mind. So tell us about the state of it, but then also talk to us about what individuals can do. Like if there's listeners out there, I know it's like a David and Goliath thing. It's a drop in the bucket thing, but there are home mining options that are coming on board now, a bit of the hobbyist type things like your bit axes and your nerd miners and that sort of thing. So it'd be good to get an understanding of what the industry is like at the moment and what can the little guy do? What can an individual do at home?
Yeah, that's a really important topic, actually. So, essentially, there is far too much consolidation in what we call mining pools. Okay, so just to explain for beginners what a mining pool, why you would point that. So, say I had one miner at home, and I've got it plugged in at home, and I'm hashing away. My luck, okay, my chance of solving a block would be exactly proportional to my contribution to that whole 1 zettahash of hash rate. So if I had one hash, I've got to wait how many sextillion years in order to be able to solve that block. So by me pointing towards a pool, this is why these pools exist. It's like, well, if I've got a miner and you've got a miner and DJ's got a miner, now we've just tripled our chances of being able to solve a block together. And if we can extrapolate that out to thousands of them, maybe we can all point our efforts towards guessing. And if we all solve a block, we all share in the reward. So it's a way of distributing and making it more economical. So if you're an entity who's mining for profit and that's your business, it makes sense if you can balance your books. If you're only solving one block every month on average, it makes it really hard to balance your books, right? If you're just going at it alone. Where if I pool my resources together with a whole lot of others, then my chances of being able to make payroll each week, I can get distributions. There's a whole different couple of mechanisms in which they distribute funds, which is raising question marks in and of itself. But essentially, that's why we've seen a lot of consolidation into a lot of there's 2 or 3 really big pools that if you go on like mempool.space, which is an amazing resource for new people just to go and watch these blocks drop in, but you can actually see the name of the mining pool that mines each block, and you can see a few of these names start to pop up. And it's a concerning trend in the fact that if you've got a couple of entities solving a lot of the blocks, it does open up some attack vectors in terms of censorship of transactions. They're doing backdoor deals, allowing transactions that aren't in broadcast in the mempool. It's like, well, I've got a block template that I'm going to include all these transactions in when I solve it. But if you pay me enough money out of band, out of the normal mempool process, I'll include your transactions in as well. So we start to see some incentives that are concerning for a decentralized protocol. It's nothing to really be concerned about. I think for new people, you don't need to freak out about it, but it is a trend that us as an industry are certainly we're aware of. The conversations are happening. And there's some really interesting developments like Ocean, funnily enough, the same developer who's develops Bitcoin Knots, also has a pool. It's an open source protocol that you can run. There's a pool that you can contribute. There's also block templates here. It's called Ocean. So if you are a miner, you do have options to be able to point towards pools that share similar values to the way that you might like to operate, as well as opening up opportunities for you to mine your own template, build your own template, include transactions that you want, which is all great things. This is why we Bitcoin, right? It's all about freedom of choice and how I want to operate my miner. Now, for those at home, I actually laugh. There's a mutual friend in the space, Pierce, who does mine in Australia. He's got a great saying. It's friends don't let friends mine Bitcoin. And that's because if you want to do it at scale for profit, you need an edge. You need to be co-located to an energy provider that has excess and is willing to sell to you cheap. You cannot buy these $3,000 machines, the latest S19. You can't plug that into your wall at home and expect to mine Bitcoin profitably. It is simply too expensive for energy in Australia in particular to mine Bitcoin straight off the bat. But what you can do, and that would be mining at scale, but there's these really fun things that you alluded to before, bit axes and nerd miners and all these really cool little open source, and we call them lottery miners. So you'll plug one of these things in and you've got something, I don't know, this is not accurate, but you'll have 1 in 400 million chance of solving a block in this next 10 minutes. But some of them are getting more and more advanced, more faster, and some of them actually compare quite well to actual lottery tickets. So you've got just as much chance of mining a block as you do winning Powerball, but you don't have to pay for a ticket. Like, these things use negligible energy, so you can plug it in at home and just leave it running, and it's a rounding error on your bill at the end of the month. It's not, you're not going to add anything to your energy bill, as opposed to plugging in these very energy thirsty miners. I don't even know what the latest ones are, to be honest. I haven't kept up with the space, but the S19s of last era were something in the ilk of 3.5 kilowatts. Okay, so that's like a space heater, even worse. You needed a dedicated circuit in your home to run it, because your 10 amp power circuit would fry. You needed a 15 amp dedicated outlet, all of these other concerns. So they are thirsty. They are very, very hot. And I guess that's probably a good little segue just to say some of the other byproducts of mining, which are really quite interesting, is wasted heat is being used for productive purposes, like offsetting other heating facilities with public pools and all these sort of things. There's a lot of industry that can be built out in and around. If you need heating, Bitcoin mining is actually a really, really good source to help supplement your heating operations for whatever it is you need, like hot water systems in some of those colder countries in Europe. There's actually hot water infrastructure throughout the towns, and they're using co-locating Bitcoin mining to help just offset some of that heating by running cooling through these machines, because they are basically just a massive heater.
Yeah, I love those stories where it's like, because for anyone that's not aware, if you consider like an electronic space heater, it's one of these like boxy type things, and it's just running electricity through a circuit and then just releasing the heat into the room. Effectively, what you can do is you just take a Bitcoin miner. You're kind of doing the same thing already. You're just running heat through an electric circuit. It happens to be spitting out these hashing algorithm answers to try and mine a block on the Bitcoin blockchain. But instead of just cooling it, you're actually piping that heat to where you want it, to heat a pool, heat a house, or heat some part of industry that needs heat. So I definitely love those stories when they pop up. And I also really like your analogy around the analogy around the lottery mining for these little at-home hobbyist miners, the bid axes and the nerd miners. Because, the odds are similar to what you would get in your standard Powerball lottery. And so if you take up, the amount of dollars you might spend on buying a lottery ticket every week for a few years, instead just take that amount, buy a nerd miner or a bid axe. It's something that looks interesting. You put it in a corner of your room, and it's like an interesting object to have in your house. But it also happens to be running this Bitcoin hashing algorithm. You're contributing to the network in a tiny little way, and you have this very small chance of actually winning a block. And there are stories of people solo mining, getting $300,000 of worth of Bitcoin out of hitting one of these solo blocks. And so it's a really interesting piece of Bitcoin lore or just intrigue that's come out of
it's awesome. They make great conversation pieces for, you have family and friends over. You've been trying to orange pill them for years, and they go, what's this little thing on your coffee table? Like, it's just another talking piece. And it's a great learning mechanism if you're interested in this thing called mining. Is righto. Well, you can configure it how you want. You can point it towards a pool. You can load custom firmware on them. You can do all these sorts of things to help improve your own education and around what mining is and how it works, what these pool things are, how do I create a template. Like, you can do all that sort of stuff on them, just in a scaled down version. And like you say, like, you win a block, that's awesome.
And I love the kind of esoteric nature that's coming out, where people are manifesting by kind of like concentrating their intention and their energy on their Bitcoin miner to try and increase the chance of hitting it through some kind of weird quantum spiritual.
That's what the guys at the Bitcoin Indonesia conference didn't tell you, is you were directing all your meditation energy towards helping them sign. Had a little bid axe up the front, and you didn't know.
That's it. That's exactly what we're doing, just channeling there.
I like it too, though, because like quite often it'll be public, right? We know when a solo miner's solved the block, and it's normally broadcast on Twitter, and you get all these people like, "Oh man, look, racing home to see if it was me." It's awesome. It's hilarious.
It's so good. Can I ask you a little bit about the company Block, formerly Square? So they've just announced a new mining rig, which is quite interesting. It's kind of a big, probably the biggest innovation in the mining industry for a long time. You know, since ASICs came out, you know, it would be probably 10 or 11 years ago now, maybe even 12 years ago now. I'm not even sure when the first ASICs started coming out. But they've kind of been the same all the way through. They're just kind of throwing in more efficiency, a little bit of more efficiency there. And it's been this very chip, tiny little increase. But every time you want to upgrade, you're having to throw out the whole machine and get a new one in. So it's very intensive infrastructure investment to upgrade to these new devices. Whereas now Square, well, formerly Square, now called Block, they've got a company spun off called Proto. And they've developed calling it the Proto Rig, which is a modular Bitcoin mining system. And so, yeah, I don't know if you can tell us much about that. What your thoughts are on this new system, and what you think uptake might be with that one.
Yeah, I haven't had a chance to dig right into the weeds in specifics around what it is and how it works, but a few things that we've been following along. So this has been in development for quite some time, and there's some really, really positive developments that have come out of that announcement. Just like we were talking about concentration of mining pools, there's also been a fair concentration on chip development in the Bitcoin mining space, and mainly out of China. So chip development is super expensive and super high tech, and you've got to have very stable, like it's even, you can't make these chips in places that have any ground tremor. Like, that's how sensitive we're talking about with these silicon layers when they're laying on with the development of these transistors at the microscopic level, right? So it's super sophisticated and super high tech. So it was been talked about for a long time that they were trying to come out and do their own development in that space, and it's been really, really great to see that they've been working with some partnerships to have that development in a way that's not concentrated out of China. Because amazingly, China is very, and you spoke a little bit about this earlier, like China is not very Bitcoin friendly, yet they've been our main source of Bitcoin hardware for, since ASICs come out. So ASIC stands for Application Specific Integrated Circuit. That's what we generalize with these Bitcoin mining machines. We call them, basically, it's because they've got one job and one job only. That's to produce hash. That's to produce those guesses and do it as fast as they can for as low power as they can. So we keep seeing these iterations, and you hit the nail on the head with the other positive development here is that space does move. I mean, we're starting to see some arguments in and around we've reached a saturation point with how small we can get with these layers of silicon on these chips. Time will tell, but there are improvements in cooling, improvements in efficiency, improvements in heat sinks, and all these other developments that come associated with developing these ASICs. And it does appear that this is a more modular supply, a modular approach to that. So you've got the chassis, you've got the cooling. You don't need to go and buy all that again. If there is a development in hash board, you can swap that hash board out. So the hash boards are these boards that have all the chips that basically do all the grunt work, produce a lot of heat. They're prone to burnout, a lot of heat with solder and all that sort of stuff. They are problematic. So, you can have these rigs and you can have these massive walls. And I encourage anyone who's interested in this just to go and have a look at like Riot platforms. A couple of the walkthroughs are there. They've just got these, giant rooms full of floor to ceiling machines plugged in with all these green lights and a heap of noise, and you can basically hot swap out these hash boards. One of these aren't performing, go and rack it out, rack a new board in, take that one back to the bench, and without any downtime to your mining operations, which is obviously super critical for trying to run. Mining is not profitable even for these big boys. Like, they struggle, man. It's a cutthroat industry, and the competition's only getting more, as we see with this hash rate. So downtime is something you absolutely want to minimize, particularly if you're a smaller operation. Like, you've got to have all these machines operating optimally 24/7 in order to have a chance of solving a block and becoming profitable. So that's a really, really cool development. I think we'll probably see others follow suit as we move forward. But aside from that, I don't know too much more in the detail of things. But I'm just very grateful for Jack Dorsey, to be perfectly honest. He, you know, he cops a lot of flack for some of his history, particularly around Twitter and the CEO of Twitter, but he has done so much for Bitcoin, so much for Nostr, and he just continues to innovate. I guess the other thing worth highlighting, which was a recent development, you guys probably spoke about this already at some stage, but the fact that he's enabled Square payments to accept Bitcoin, it'll go live next year. That's a game changer, man. Like people won't even know they're accepting Bitcoin for payments. So he's just a great innovator. He's using his money for good rather than evil, I think. Which just very, very grateful for that, man.
Yeah, there's not much of that in the world. It's more evil for evil's sake. It's interesting that it took this long for the mining industry to have such an innovation. When you consider, like, even if you have like an old like a PC at home, you've always had the ability to swap out components. So I need to replace my CPU cooler. I need to replace my hard drive. I need to replace my thing. And it's always been this modular thing. Well, not always, but more recently it's been this modular thing. It's strange that it took this long to come to the mining industry. So it is going to really allow miners to up their game for replacing.
To be fair,
down cost.
To be fair, they the S19s and even from S9s on, they are kind of modular. You can swap out hash boards for them, but they just weren't probably as easy, as accessible. You need to take the fans off. It was downtime. The whole machine needed to come out. So I think this hot swap idea is more the machine's still running. I'm just going to rack this one out, rack this one back in. So it's a little bit more of a streamlined approach to that modularity, but I think to give the other guys a pass, they did have the ability to swap out the central control board, the hash boards, the fans, and all that sort of thing, albeit not as easy.
Cool. All right. I've got two more questions for you, and then maybe we'll let you go. DJ's dropped off the call. I think his internet died. He's been messaging me.
Finally died.
He was struggling before, having a bit of lag, and so it's decided to just go kaput. So I'll just ask a couple more questions, then we'll let you go. First one is just around, so mining in the context of, we're seeing quite a bit of geopolitical strife around the world. We're seeing, maybe we're seeing this fourth turning come into play in earnest, and we're seeing a lot of chaos, a lot of angst between nations, between people, between different groups. And in the context of Bitcoin and Bitcoin mining and Bitcoin pools and hash rate distributed around the world, what can you foresee happening to Bitcoin and the Bitcoin network if major conflict breaks out, where we're seeing things like undersea cables getting cut, where we're seeing crackdowns on some of these businesses doing these certain operations, in order to direct energy towards a war effort or something? Oh, you can't be wasting energy on Bitcoin mining. We need that energy to build missiles and bullets. How would you see like a global geopolitical conflict impact the Bitcoin network?
Yeah, I think you take some comfort in the fact that it'll only ever be temporary. So we saw probably the best example of that happening would be the China mining ban in circa April 2021. Something like 50% of the Bitcoin hash rate dropped off overnight. China pulled the plug on all these miners because there was a lot of excess energy in China, which meant that a lot of these mining operations ended up centralizing in China, which was a risk in and of itself. So it's a kind of a blessing in disguise from that moment when they pulled the plug and these miners got to distribute globally again to find the next cheap bit of hash. But we saw that instantaneous drop. And that could certainly happen again where, say you black out the United States, for example. We've got, easier to say than actually do. However, all that would happen is that the hash rate would drop and the blocks would slow down. So if our difficulty adjustments, going back to that, was set at 1 zettahash and we lost half of that, we would expect those blocks to slow down significantly, potentially even more than the doubling of the size. But we would just have to wait for that 2016 blocks, circa 2 weeks, for it to realise, hey, a significant amount of computational power dropped off. We will need to adjust our difficulty now to make it back to every 10 minutes. So you might see a slowdown of those blocks, might freak people out a little bit to say, oh my God, Bitcoin's over. But it would have to be a dramatic drop for me personally to be concerned about any potential threat long term to the Bitcoin price. Like, turning off something like 90% of that hash rate would significantly. It would take a long time then for those 2016 blocks to propagate. So that's a probably scary world, but unlikely in my humble opinion. Particularly as like Bitcoin in and of itself incentivizes more and more independent energy. Okay, already we co-opt with a lot of independent sources. Like, in order to be able to turn off global energy, which would what need to be happen, right, for a 90% drop of the hash rate, you'd have to cut the power everywhere, and that's simply not practical. We've got lots of independent generators, different transmission networks, different distribution networks, from top down, from high level nation state generation facilities, right down to me with solar power at home and a battery mining Bitcoin. So it's not a very probable likelihood that you would have any significant long-term impact purely through cutting off energy alone.
Sure. So the worst case scenario might be, because there's a lot of mining hash rate in the US at the moment, particularly in Texas, those sorts of areas. So a worst case scenario might be the whole of the US gets blanketed with an EMP or something in some kind of geopolitical conflict. That hash rate goes, let's for argument's sake say it's 50% of the global hash rate goes, with the US losing their power grid. The worst case scenario would be there's a 2-week period of drop off in hash rate. The difficulty adjustment has not yet picked that up, and it would take about 2 weeks for that to happen. So there might be a slowdown in blocks. There might be an increase in transaction fees as block space becomes great. So yeah, sorry about that, guys. We just had a network drop. So I was just kind of wrapping up a point around what would happen if the US got nuked, EMP'd off the map. We lost 50% of the hash rate. Per my understanding of what Daz has said, there's a 2-week period before the difficulty adjustment will readjust to the new baseline level of hash. There might be a slowdown in
blow out a little bit. So if it were to slow down, we lost 50%, that 2 weeks might become a month, right? Or a little bit longer, but eventually it's around 2016 blocks we backwards look. So if our blocks slowed, that 2016 blocks would obviously not come in for a few weeks. So that might slow down somewhat. But then again, that would look back. Eventually we'd hit that 2016 blocks. It would look back and it would auto adjust to cater for the new level of hash rate.
Yep. Awesome. And the way that you can contribute to that, try and avoid some of that scenarios, is to help spread out hashing and mining around the world, so it's not localized into a single country or a single jurisdiction. So do you have any final comments on whether listeners should look into a BitAxe or a nerd miner or anything like that?
Yeah, I think the BitAxes, you basically get more hash rate for your dollar than a nerd miner. They're all cool projects. They're definitely worth grabbing and having a go. And if you do have access to abundant, cheap energy, then maybe potentially that's the point where you would look at, increasing your mining operations for yourself. Particularly if you've got some edge, you own a solar farm or something like that, then that conversation changes.
Yeah, absolutely. You can get a bit fancy with it and have whatever mining solution you have, whether it's a single unit or a BitAxe. You can obviously get it to only turn on when when the sun's shining, your energy's free, and you're exporting to the network. You may as well pass some of that to your mining operation, mine for free effectively, and get your lottery tickets for your efforts. Okay, well, thanks for your time, Daz. It's been a great chat. Great to get some insights on the mining space and your comments on some of the other things going around the world. And
absolute pleasure.
Yeah, thanks for joining us, and hopefully we'll see DJ next time. We can sort out his internet struggles.
My Starlink's better than yours, DJ. That's all I'll say.
Awesome. Well, thanks again, Daz. And
thanks, Mike.
And, we'll chat to you guys next time. Thanks very much for listening.